Hey, good morning, team. Pretty chill today. We've got Ben jumping on. He's a recent PFW member, and he also just went unconditional into his property. And I thought it would be really good for him to share a little about his journey and sort of his thought process, sort of before joining the workshop and then after. Like, what were some key lessons that sort of got him on a different path on in terms of what kind of properties to look for? Because I remember before that you were looking for something else, so maybe you can tell us a bit about that as well. And then maybe we can start off, just get to know Ben a little bit. Like, what do you do for like your normal job? Like, because maybe we can get a better understanding if you're dealing with spreadsheets all the time.
Thanks, Brandon. Thanks for asking me to talk to the audience here. Well, I'm an engineer as a background and happen to start working for like sort of product marketing, product lifecycle management and portfolio, looking after those kind of stuff. Me and spreadsheet is a friend. I'm not too afraid of crunching the numbers and stuff. As you said, like my investment journey is pretty much almost every venue that I could think of, like share market, foreign exchange, all those kind of stuff, mutual fund, and trying to pretty much, looking for spreading the risk and diversify the port that I'm having. I got a few monies in share, got the returns, got those dividends every so often, some mutual funds and those kind of stuff. The property journey is actually starting off from last year when I tried to contact my main bank. It's still BNZ anyway. So I asked them to give me a call, trying to look into leveraging my properties to start the investment journey. But the sad news was that they turned me down. BNZ was like, "Oh, you're living in an apartment. We don't want to basically using the asset that you have on hand as a leverage." So that's pretty much last year. And, my dream was crumble. Yeah. And then come again this year.
But maybe tell us a little bit about what got you thinking about it. Like, why now? Why not? Like, because obviously you had your apartment for a while, right? You've lived there for a while.
Yeah, 2019, paying it off like crazy. Me and my wife, we earn, a good money. So I would say good, but I guess it's not too bad. We got a bit of cash flow that we could actually just, dump all of them into trying to get rid of the debts that we have on hand. So I guess end of the day, we creating the equity, on our hand. So like, I guess to me, that sort of dead money that I can't do anything with it. And why not just trying to turn it to, using it as a leverage and then see what I can do with it. I read some of the articles from, BNZ and, some articles online, and basically, I can actually trying to recycle those monies that actually sitting there doing nothing unless I'm actually paid off. I could do something with it. So even though I got some differences, why not trying to do something about it? Back to the stories. Back in this year, I trying to do that again, but I do know that I don't want to talk to the main banks any longer. So I'm looking for a broker who could basically take me into that journey. I talked to a couple of guys prior to Blendon, and then I come across you online, your YouTube channels and stuff, and I start diving into some of the free YouTube video that you guys you got on publishings there. And yeah, why not contacting you guys? 5 minutes after I filling up the information, Landon give me a call and
Oh really?
Yeah, you did.
Usually I'm not that fast. Maybe it was just the timing.
I was surprised at myself. I just left the screen because I wasn't sure. Like I did fill up all the information about myself, all the contact numbers and stuff. And then I was like, I just gonna walk away. And 5 minutes afterward, and I got a call, and my journey start from there. And you were saying that I could actually using the money from the apartment as an asset to leveraging that for my investment. From there, we're getting into the 10-minute consulting sessions. You're laying down all the gaps, the wealth gaps and all those kind of stuff. Then I start going around, Auckland and looking for properties. First thing first would be looking at the budget. I went down to the South Auckland. Yeah. Looking at properties down in like Manurewa, Conifer Golf, and all those kind of stuff. Spot one of the properties, the corner plot, a good 600 to 800 square meters that I could actually probably do something about. But unfortunately, that properties went for auctions, and the budget was like way too high than what I thought it would be. I first thought that I could actually get into that property is around 600 each, but I think it's gone for almost 700. So from there, I start like taking it more serious. I haven't actually taken the class of PFW yet back then. I just like flumbing my way around and trying to get more knowledge myself. And then I was like, yeah, why not just, ship some monies into this class, it's more structural knowledge and stuff. I get into it at the end, get some knowledge behind, the thinking process, get more sort of like structural process and thinking process behind what I'm trying to achieve, what I'm trying to look for. One of the lessons that you got would be like looking for the regional areas, where the house price is still affordable. Because let's get into the number, I guess like my ceiling budget was like 700K based on what I currently have. With the 700K a couple of months ago, Auckland is almost impossible, I guess, unless you really spend, I don't know, hours after hours online, try to search for it, going around the cities and looking for the right one. But yet you still probably got like half a section, not even half a section, cross leads or some kind of thing, something like that. And the rental yield is probably not as high.
One of the things that people are most scared of, so when they start investing, is going outside of Auckland, not being able to see the property. And also, they are worried about they're not going to get as much capital gains. So what were the thought process behind, like, okay, how do you overcome that? What did you go through?
I got the same fear when I first started. That's the reason why, South Auckland is my first place to go. And then after that, when I start talking more and then, looking for the lesson more, there's a lot of potential. There's a lot of strategies you can take up on. Like, you can getting on a land bank. We talk so many times about the land bank and what you could do about the bigger piece of land. You can subdivide it. You can put some more, minor dwellings and trying to increase the cash flow from there with some investments, So that's where I start broaden my searching criteria. The second properties that I was looking at was up in Whangarei. I missed that out as well. Like I thought that Whangarei would be cheaper, but then end up, the property dropped. Not at all. The one that I was looking at was probably 100K more than my offer, I have to say. And I started looking around. My initiate idea was going Waikato's and all those kind of places, but they are way overpricing. And then spotting Napier's and Hastings and Hawke's Bay and those kind of places. One of the barrier for me to get into the regionals around that area would be the regional tax, which is quite high when you start putting the number into the spreadsheets.
You mean the rates?
Yeah, that's right. Yeah, 5-6 grand easily on most of the places. And I spot this place where I could just share the screen, I guess. So I guess you guys can see my screens. So this is the property that I make an offer and it's got accepted. It's gone unconditional a couple of weeks ago.
Yeah.
Well, basically, it's number 7 Hillary Crescent in Marianui, in Napier. So it's got almost 900 square meters, as you can see. It's got 2 dwelling in one title. If you're looking at from the aerial views, the front house is basically 1920-ish sort of house, and then the back house has been put there by the existing vendor. He put it there probably around like the year of 2000. It's got all the consent, and everything, and put it on his titles. So these properties caught my eye because one of the thing would be it's huge, and it's got like 2 properties. And when you start crunching the number, 2 property giving you the highest chance of the return. Like in this case, when I start picking up like some knowledge around the property itself, like in Marianui, medium rent is around 555, and if you scroll down, 3 bedrooms giving you 560. The back house is 1 bedroom. So my rough estimation would be I could probably scoop 350. So 350 plus 560, easily 910.
I'm actually getting between 330 to 350 on my 1 bedroom in Napier.
Yeah, somewhere there. So it's just a rough estimation. Then the agent was like, the property is currently rented at 850. Mm-hmm. So my 850 and 910 is not too far apart. I go with 950 on my calculation starting off, and then I work it out from there.
Yeah.
And that's when I start crunching all those data into I working out from this rental yield. I know that the 3C would come afterward. But the first thing, like before I'm actually trying to dig down into the lessons that are available in the PFW. I crunching it into this into this spreadsheet first, and then just to see where I am. The net yield wasn't so bad back then. It's like some sort of like 8%. Net yield is like 5-6% somewhere there. And then I start pulling all the data together, pulling out all the recent purchase, and I trying to calculating the per square meter and what sort of pricing I should actually offer.
Nice.
So from there, what I did was I make an offer, got accepted at 585 eventually.
Yeah. That's a good price. That's a good price.
Yeah. So when you're looking at 585, well, let's put a 3C. Probably be better. So 585, I put like $5,000 for due diligence and all those kind of stuff. It's my first property, so I want to do everything according to the book, like building reports. What else? Lim report, which the agent hasn't got one, but at least I got it under my name as well. If there's anything dodgy about it, I could actually just take anybody whoever actually providing me the report accountable for.
Yes.
So from there, if I'm planning to hold it for the time being, so we put like 910 there. I did talk to Hadley after I put the offer on, and basically that's the condition that he basically providing. The rate, as I mentioned earlier, is sort of like quite high. For this property is 4,300, so that is there. Insurance is $3,000. I go for the extreme, so that's how I put it there. So anything lower than that would be the earning. So that's where we are, I guess. Yep. So it's got a bit of negative cash flow to start with, but I think if there is any movement in terms of all the interest rate and everything, I could actually just turn that into a cash flow, a positive cash flow right away. And like to me, as I mentioned earlier, like we got quite liquidity in our family. So for us, a bit of payment every week around. Well, actually, it's less than that from my calculation. It's not too bad. So I put the goal of like if I have to ship in my money for like $100 per week, it wouldn't be too bad for me to actually trying to own a properties and hold on to it. And then back to the property, but basically is almost 900 square. So I could probably subdivide afterward. And the setup is already there. Like, you got the back house and the front house. I could probably just chop it in two. If I could in 400K on the front properties, another 400K, 300K for the back properties, that's an easy 700 to 800K from, the 600K investment. It's not too bad.
Because I guess the way to look at this as well is like, okay, although we want to look for cash flow positive as the main thing, but if you look at the fact that this land is actually subdividable like straight away, right? You could potentially put another tiny home on the other side so you can get an extra income, maybe move the garage. You could shift the minor dwelling and then maybe build another 3-bedroom or 4-bedroom at the back as well. And actually, Brendan, one of the other members in the group, like he bought a similar property where the minor dwelling, it could be positioned in a better place. And so what he did was he's basically moving the minor dwelling and then like building at the back. So he's gone and done that with a Rotorua property. So because you got 900 square meter, this property, like, because you're basically trying to look at like a opportunity cost, because it's going to cost you $12,000 at what it is right now, but potentially if interest rate went down, obviously that would be positive. But the other thing that is good is that if you compare to what you can get like at that level, it's like maybe like a new build might even cost more than that. Like new builds cost like 20,000 at the moment to 25,000. But this one is like you're getting so much more land that you can develop and release the equity. And I think the other thing that I noticed for you, Ben, is like I was very supportive of this deal because you guys like manage your cash flow really well. And what you really want is something that you can add value in terms of equity. So that's why I think this deal is quite suitable, as a first property for you.
Yeah, and I guess it's the supporting that I got from Landon's and the teams, Frankie to name his, and also the lessons that you guys put online. That basically I've gone through the lessons first, and then once I get into these kind of deals, basically I going back and re-looking at that because some of the knowledge basically just way above when you start looking at it when you don't really have an experience. But once you get into the deal, you start picking up all the all the jargons and all those kind of stuff where all those lessons start making sense. Cash flow positives and all those kind of stuff. But when you look into this, there's an opportunities behind it, as Landon said as well. So, and that's where I think like if you understand your situation well, you broaden your horizon, you broaden your searching criteria, and you start getting one. That's where I am at this stage. Yeah.
So it's interesting because can you go back to your calculation?
Yeah.
I would imagine 910 to be closer to. So, you must have recycled some equity. So if we go back up, what's your end value here?
Oh, that's just my playing around number.
Yeah. So let's say if you made it like 590, which is like the end value, and where does the cash flow sit? Because you're basically because what you've done there is you've increased the value, assuming that the property goes up in value after your like renovation costs.
Yeah.
But let's say if we kept it exactly the same, where's the cash flow sitting? It should be only like negative. Yeah, I thought it might be like negative couple of grand.
Yeah.
12 grand was a bit extreme.
$30. Yeah. $30 a week that I have to put the money in. Yeah.
Yeah. Yeah. Yeah. Because I was thinking 8% shouldn't have 12 grand.
No. I was playing around with the number before. I was like
and I did look at it before. I don't think it was 12 grand. But anyway, that's cool.
Yeah. The other thing, just put into the due diligence sort of thinking process, pull it off from QV. So I start crunching the number and the average of the price increase in Hawke's Bay and Napier is quite good. You're looking at like for the last, I don't know, 2017 to 2023, you'll be looking at an average of 8% increase every year. The rental was quite good as well. That's pretty much the graph. You're looking at like nearly 9% increase year on year.
Yeah.
In average. So that's the reason why I was like, that's probably not a bad investment if I want to get into it, even though the rate is quite high and the maintenance is probably quite high for a 1920 sort of housing. Yeah. So that's
really good.
Yeah, looking at like the whole year things, I guess like probably next year afterward, I probably start making money out from these properties.
If we take a like a technical analysis approach, if you look at the trend line, we're basically carrying on from the 2020. The trend line just suddenly like shot up, but now we're just continuing. We've lost all of that bump, and we continue to grow on that the older trend line.
Yeah,
like where your bar is sitting. Yeah. That's really awesome. And we've got a few of the members jump on today, and a couple of you are still looking. So I thought it'll be really good. Like if you guys have some questions for Ben, because obviously this is, he just got into it, but he definitely have like the speed of him learning was and speed of action. I was obviously impressed as well. But it does help because he's got an engineering background and that helps him sort of go on that logical path like faster. But yeah, I thought maybe open it up for you guys to sort of talk to them.
Yeah, just want to know like how long was it after attending the workshop and learning that, and what's the time span like from your actually get into the thing and then to actually like start looking for deals, and how long did you spend on looking for deals?
Put it this way, I start getting to talk to Blend on late June.
Late June this year.
Yeah, I get into the PFW probably last month,
Last
month
month.
and a half before.
Yeah.
Yeah.
And it only take you a month to find this deal.
Yeah.
Wow.
Yeah. Because I guess like my first criteria of searching things was a bit narrow.
Yeah.
It's from time to time I nearly give up, because basically when you're trying to look for cash flow positive, it's just nearly impossible.
Yeah.
But then when you start looking back into the lessons, there's some of the potential improvements and all those kind of stuff.
Yeah.
So I start losing up the criteria of searching for, like multi properties, nowadays it's just harder to come by. I keep looking at it anyway. There's one or two, like every week, but back like last month, you still got much more to look at. But I guess you probably need to be quite dynamic on your searching criteria. You got all the knowledge there, and then how you would apply to your searching. I think that's the key. So, because the market keep moving, so you basically need to pick up the pace and trying to go along with the market, like where they are, what's the price like, and then you adjusting your searching criteria accordingly. If you stay static, you pretty much decrease your searching like that.
Yeah, I see. Yeah. It's pretty impressive, like the short amount of time it took.
Yeah, thank you. I surprised myself as well, but hey, I mean, once you got it, you just have to grab it, and then when the number makes sense, I mean, because end of the day, it's not a witchcraft. It's pretty much everything on the spreadsheets that you could actually just always refer back to, and if it's still within your budget, why not?
And from the moment that you see this property to the time that you actually make your offer, like conditional offer, like how long it took you?
I think 2 weeks.
2 weeks, yeah.
Yeah, I slept on it as well, and it was the agent who basically picked up the call and rang me and asking me what I want to do. Then that was like the very last day that I actually put an offer on.
Yeah.
And if you want to refer back to my spreadsheets, I was like, that's the price that I was thinking of. So I got the band gap there. At first I was thinking about going into like 550.
Yeah.
And I was like, oh, it's going to be multi-offer. So I probably, put a bit more on there, just increasing my chance.
Yeah. Have you got any competitors when you?
Yeah, I do. I probably got a few.
Yeah. Okay.
Yeah.
I see. And then you just push your boundary to avoiding
like 10, 20 grand more. I mean, it wouldn't hurt, I guess, like for me.
Yeah.
And as I said, like if I can live up with the negative cash flow for a while, then why not?
I see.
Yeah. And the thing is, if you put like a cabin on it, it'll be cash flow positive straight away.
Yeah.
If you guys, I don't know if you guys have HQ cabin or cabin HQ. Let me just have a look.
And generally for like putting a cabin, like what sort of like a investment you're looking for that? Because I've searched some of them, but like I think it's normally, and how does the service work like for the cabin?
Yeah, so I just chuck it in the it's just an extra room for the kids, like if they're a family of 4, the kids will happily take the cabin. Yeah. So something like this is anywhere from like 30 to 50 grand, depending on
somewhere there. Yeah.
Yeah.
A 2-bedroom is probably starting off from like 75 grand. But then you have to budgeting for like transportations and all those kind of stuff as well.
Yeah. That would be the high end. This one is much cheaper. Yeah. You can check them out. Yeah. They'll do it a lot cheaper. You can get a quote from them.
Yeah.
Thanks for sharing. Really.
No. More than happy to do.
Yeah.
I got a lot from these sessions, and I got a lot from the lesson as well. And I think it's worthwhile for to share, because end of the day, that's I mean, it's a science. It's not a it's not a witchcraft, as I said. Everything can be looking back into the spreadsheet and start making sense out of it. Yeah.
Awesome.
Thank you.
Don't be shy. Ratan, you're still looking?
Hello, can you hear me?
Yes.
Yeah, I'm going to just sort of start. I think at the moment I haven't started, but planning to start soon. Sorry, I've been on this journey for such a long time, but just life has been really busy. But no, thank you, Ben, for sharing. And one question that I did have is, how much time did you spend sort of getting to know the area itself, the suburb or Napier itself? Like, did you go there? How much research did you do on that?
Prior to the offer, it's probably a few days, I guess. Looking around, looking from, online sources, trying to come down to the number that makes sense. And then after the offer was accepted, me and my wife drove down there just to trying to put the properties, just trying to compare the physical properties to the pictures that you guys seeing online before, and looking at the neighborhood. We driving around the streets of Hillary Crescent and see how it goes. Because if you actually start looking online, you probably walk away. Because to be honest, I mean, that's probably like a capital of synthetic cannabis, but that's like down in, I don't know, Napier, westward, I guess. But people live there and they live their life. The city is lovely. So that's probably, the whole process is probably like 2 weeks max that I'm looking into that. Yeah.
No, thank you. I think it's quite, quite brave for someone with their sort of, I guess, who are new to this journey to buy in an area that you're not so familiar with. So that's just good to see. Thank you for sharing.
No worries. Thank you.
HBC. I'm not sure who HBC is.
One more question. Have you secured a social housing contract?
The settlement is end of October, but I did talk to Hartley, and he has confirmed that I got the rental for 910, as I mentioned earlier, and social housing would be part of that.
Yeah,
awesome.
All right. If no more questions, I want to just thank you, Ben. Thank you for being so generous with your time and just sharing that with everybody and just opening up. That was a really good deal. So, sorry, came in late, running around after 2 kids. All good, all good. We look forward to the next one. So now what we need to work on is some options. Like, is it to chop off the land? Like, we got to look at we got to explore more options. We got to talk to maybe planners, builders. Maybe just look at do we just chuck some cash flow on it straight away? So we can definitely explore some options there. But yeah, really well done, Ben.
Thank you.
Thank you.
Glad to have the team supporting.